Good afternoon. You're tuned into Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi, and the markets continue to be very volatile. We have seen a lot of jagged edges throughout the trading session. It's been a complete tug of war between the red and the green. For now, the Nifty is in the red, though the mid-cap index has actually managed to bounce and beat that trend, and it's holding up in the green quite comfortably. The markets continue to be very jittery today, as I pointed out, even though the India VIX has cooled off quite substantially today in terms of at least the move. It's still at around that 17 level, but there's not a big jump that happened today. It's the day of the weekly Bank Nifty expiry as well, so there's that added added volatility on account of that, and PSU banks have managed to bounce back, led by SBI. In fact, not just SBI, which reports numbers tomorrow, L&T is also going strong into the earnings today, so that stock will come up for you on the screen. And Reliance, which was the stark underperformer yesterday, is actually bouncing back today and is one of the top contributors to the gain on the Nifty. Earnings galore, and of course we have seen good earnings in the last few hours, especially for Bharat Forge. It was a very strong commentary that came by, so that stock is higher. You also had Balaji Mines, which reported very big improvement in earnings, and that's why the stock had surged 13-14%. However, the commentary from Canara Bank is a bit mixed and subdued, and that's why the stock is reacting also likewise. But clearly, Aisha, again, another day of very big individual moves, and at the index level, clearly not able to make up its mind.
Absolutely not. Just this way and that all throughout the day. DRL, of course, reacted to its numbers. There was a margin base which the street didn't like, although the profitability was largely in line. 3.5% of a downtick is what you're seeing on that stock. Asian Paints ahead of its numbers tomorrow, a 3% cut coming in for that stock. That big move on FMCG plays, some of it is getting undone. So Unilever, for instance, which was the top mover on the Nifty yesterday, that's the third loser from the bottom, and that's down about almost 2% as we speak right now. HDFC Bank continues to languish. ICICI Bank still in the red, nearly about 1%, and technology as a pack continues to underperform regardless. Today, of course, a handful of gainers. Anisha just flagged off Reliance, the price action on that, coupled with L&T ahead of its numbers. 1.25% of a move is what you're seeing on that stock. Let's also check in on Hero MotoCorp. There's TVS as well. All of them slated to come out with their numbers. In fact, Hero MotoCorp should be well within market hours, perhaps, or at the fag end. About a 0.6% uptick is what you're seeing on that particular stock. TVS Motors, though, more sedate of a move of about 1% of a downtick. But Voltas, after the commentary, hasn't resurrected, still down about 5%. Pidilite, even though the numbers were impressive, the stock is down almost 5%. SRF is the other laggard in today's trading session. In fact, let's take it across to our experts. Nishal Maheshwari joins it on the fundamentals. We've got Kunal and Naresh on the charts as well joining in. Kunal, first a word on this volatility. I mean, how long is it going to continue really?
I think we should be at a point where over the next 1 or 2 days, we should be at the cusp of at least some retracement on the India VIX. So we probably believe that we should probably come back to that 16 mark for the India VIX in the next couple of days, because this is 9th or 10th consecutive day for the India VIX rising up higher, and we've seen this as one of the most rarest of the occasions when the India VIX has moved up higher on a consecutive basis, and eventually post that we see a couple of days of cool off. That generally adds to more of a relief rally for the indices. So I think we could just be at the next couple of days at a point where the markets may get back into a stable territory. 22,200 broadly is what we've been holding out throughout the day for the index. And I think that could now be termed as a good short-term support for the Nifty.
Okay, point taken. A lot of big buzzers from the PSU basket. Take a look at BPCL. That stock is high by 2.5%. Power Grid is doing quite well for itself, a gain of 2%. And then Hindustan Zinc. Remember, I think it was yesterday that perhaps that interim dividend announcement was made. That stock is high by 6% today. And of course, Hindalco is also in focus on account of the latest commentary coming in on Novelis IPO with respect to the timeline being in September and the valuation being close to $18 billion. So that's something we're watching out for. But Bharat Forge is the big gainer in the trading session today. The numbers were largely in line with expectations, but I think it's a commentary that's fueling that kind of gain on the stock. Shrishti, tell us your reading of the earnings and the important comments coming in the con call.
The numbers were in line to what the street was expecting, and the company did highlight that the fulfillment
of the defense orders and the continued ramp up of the export business across all business segments except oil and gas actually helped the growth in Q4. But it's the commentary for FY25 that has really fueled the rally in the stock for today, because they expect FY25 to be a year of growth driven by their defense business, industrial casting business, as well as continued improvement in the capacity utilization of their overseas business. So good growth they are foreseeing in all the divisions. In the con call, they do mention that the overseas business EBITDA is expected to grow in the double digits. The US business is expected to have a healthy EBITDA by Q4 of FY25. So the street was keenly watching out for the kind of rebound in the overseas business and the kind of growth that the company is looking forward to. In the India business, they do say that they see the defense to be doing very well for Bharat Forge, because that's another segment that the street was really bullish on. They are saying that they are creating capability to build 100 guns a year and 20 vehicles per week for the short term, and government approval must be before exporting the defense products. They see tremendous opportunity in the defense products as well. On the financial front, they do also say that they see ROCE to keep improving and cross 20% mark in the next 2 years as well. And in the future, they do highlight some of the sunrise sectors as well, and e-mobility is another sector that the company is really bullish on. So all in all, we can see that across all the segments that Bharat Forge is present in except oil and gas business, the company is really bullish on all these segments, and hence the excitement in the stock price. Back to you.
In spite of all the capex and investments that we have made in the last 5 years, our balance sheet is pristine, and it provides us with a lot of dry powder to take benefit of opportunities that may arise. In the future, the EV business also will provide such a growth opportunity and further accelerate the growth of the business. We are very confident that for the full year of 25, in the fourth quarter, we will see extremely strong performance from our global subsidiaries. The aluminum business continues to see robust demand, with growth driven entirely by drivetrain agnostic components. So we are not at any risk from any potential slowdown in passenger car EV.
Okay, that's the word coming in from Amit Kalyani from Bharat Forge, and the stock is holding up at the high point of the day. Decent surge in volumes as well, almost 5 million shares traded and an uptick of almost 9% coming in thereof. Nishal, hi, afternoon. Let's start by discussing Bharat Forge. The stock is, I think, at an all-time high, and the commentary also has been superb, but at 1350, would you be a fresh buyer in Bharat Forge?
Afternoon, Aisha. Unfortunately, we do not cover it, so difficult for me to say that basically. But they seem to be in the right industries. They have done very well in the defense side. I think they were the one of the companies basically who had invested very early into the defense space, and I think they are reaping the benefits of it. Going ahead, as I said, we do not cover it, so difficult for me to call on the valuation front. But I think the company is a very decent one in that space. And again, on the engineering side, manufacturing side, I think they are one of the good companies out there.
Not really covering Bharat Forge, but Nishal, what about private banks? I mean, how long before you actually see a meaningful and, more importantly, sustainable uptick in them as a bunch?
So if you really look at it, I think except for HDFC Bank, and Kotak because of the accident. Otherwise, I think both Axis, IndusInd, ICICI, all of them seem to be doing pretty well. I think in the last 1 month, they are all up by almost around 7 to 8%. So I think private banks are on the move. They are really in a good spot. Numbers have been very good. Valuations are favoring them. So I'm very hopeful basically that in the coming quarters, 2 or 3 sectors will do well, IT, banking, and to an extent FMCG also.
Let's see whether these sectors turn around or not, Nishal. But let me bring Nuresh also into the conversation. Nuresh, a lot of big buzzers in the trading session today, right from our REC PFC, which have managed to bounce back from that big dip that they had seen yesterday, to the fact that Pidilite and Voltas are reacting negatively to their earnings. Are you seeing any big buying opportunity on dips or anything that you suggest people should book profits into? Any specific charts?
So out there, we are seeing a lot of reaction post results. So if somebody has looked into, say, a Marico, I think the stock can see some profit booking around that 595, 600 mark. The stock has hit a new all-time high. So some bit of profit booking could be done over there. We are seeing more price reactions post numbers, so tough to take a trade unless we've seen a sharp correction. So Voltas could be interesting if we tip another 4-5%. That could be a good entry point for in the stock.
Okay, that's some of the buzzers in trade right now. Bharat Forge, of course, holding out. REC PFC as well, seeing a decent move. Kunal, is the damage out of the way on REC PFC?
Well, short-term wise, yeah, but I think the stock has not yet closed the gap which was created 2 days back for REC. I think the gap for the stock on the futures at least is around 570, 575. So that high has to be taken out for the stock to really, indicate that the medium-term, bottom is in place, and we are now looking at a much more stronger breakout. But the good part, at least in the last 5-6 days of initially the rise for REC PFC and then a 2-day correction and then a bounce back, is that the volumes and the volume activity has been very, very high, which means that whichever way the side breaks out, whether it's 570, 575 on the upside for REC or whether it's 520 on the downside, I would believe that trends could be much more stronger.
Okay, Hero Murukab, the numbers look largely in line. At least that's the first flash, wherein the PAT has come in at about 1,020 odd crore rupees. We were penciling in about 1,026, so that's bang in line. The critical thing, of course, is going to be to look out for what the volume projection is. Even though the monthly sales data does seem to be projecting an uptick, we are anticipating a 10% year-on-year volume picture, but on a sequential basis, it could very well be a downtick of about 4.6%. So I think that is something that the street is going to be looking out for. I don't think we have more numbers, Anisha, do we?
Yeah, we do have. EBITDA margin has actually come in at 14.3% in the quarter gone by. It's reflecting an improvement of 120 basis point. Volume figure was largely known on account of that monthly data, so I don't think street will factor that in largely. I think margin is something that the street would want to know. So 14.3% in terms of EBITDA margin, an improvement of 120 basis point. They are saying it's driven by product mix, lower commodity costs, higher savings, and judicious price increases that the company has taken. So that's another thing to watch out for. And in terms of the commentary coming in from Mr. Niranjan Gupta, who's of course the CEO of the company, they say that they're looking to boost the scooter portfolio by launching some new products there as well. They're driving market share gains on back of new launches in premium and 125cc segment that they've done in FY24 so far. And overall, they're expecting that they see a very positive outlook for the upcoming years, and they're saying coming year will see us taking big strides in EV through product launches in mid and affordable segment. So overall, it's a positive commentary coming in. Abhishek Shinde is also joining us on the show to talk to us about that. Abhishek, on the profitability front, it's largely in line with expectation. Even top line isn't too very different from what we were expecting. How do you read the margin profile of 14.3% and the commentary coming in?
See, broadly, you see that the 14.3% kind of margin which company has reported is almost in line with the street estimates and our estimates. So the broader thing is that we have to keep in note that this margin is coming out in spite of the losses what it has been making in the EV business. So the underlying EBITDA margin for the IC business may be higher than that of that one. One. Two, the management has been optimistic on the business, and so we are also on the two major points. One is that the product mix of the company has been consistently improving, which is moving towards more to the premium side. And second, that it has been ramping up its distribution network, which would help company to have a better engagement with the customers going forward. So considering that, we have been positive on the Hero MotoCorp performance. And given that it's a traditional first-time buyer for the rural segment has yet to recover fully. So we are positive on that, and the result we believe is largely in line with our expectations.
Yeah, there's a dividend of 40 rupees per share as well, which got announced. But other than that, what from the commentary, Abhishek, would you look out for, besides, of course, whether the rural demand looks sustainable or not?
See, the key thing that we are looking for from the management side is mainly on the product launch side, especially on the 125cc plus segment. One, two, it has some point of a time talked about the multiple product launches in the EV segment too. Three, that expansion, status of its expansion of its EV distribution network. And four, that what it has been doing up now to expand its presence in the export business. Recently, it has set set up new tie-ups in the Nepal market. So beyond that, what are its plans? That are the key things which we are looking for.
Okay, point taken. So that's the word coming in on Hero MotoCorp. But quickly, if you can tell us what's the pecking order within the entire two-wheeler space, because of course today TVS will come out with its earnings as well. But in terms of stock picks?
Hero MotoCorp has been in our topic, given that the kind of traction it has been in the business and the changes which it has been doing to set up an structural or fundamental business. And second is on the valuation comfort. It is still cheapest stock available in the whole pack. So we are continuously considering Hero MotoCorp as our topic in the two-wheeler segment.
EV with product launches in the mid as well as some other segment as well. I've missed that flash. Affordable segment, and they've approved setting up a unit in Brazil as well. Coming year, we'll be taking big strides in EV once again. And yes, mid and affordable segment is where the product launches, Abhishek, are going to be. You want to react on that? Abhishek, can you hear me?
Okay, in the meantime, I'll just read out further commentary because the management saying that the macroeconomic factors is something which is going to aid the industry growth. They see multiple tailwinds for the sector in the upcoming quarters. They will be driving market share gains on the back of the launches that they're making in the premium and the 125cc category, and they see a very positive outlook for the upcoming years. Abhishek, we'll let you go on that note, but let me quickly throw it to Nishchal if he's still with us. Nishchal, within the two-wheeler pack and this entire rural recovery that we are talking about, do you think two-wheelers like Hero MotoCorp, etc., are the best way to play it?
Quite positive on Hero Honda, basically. And I think not only the rural side, but I think they have done pretty well on the EV side also now. So, and there is a whole bunch of EVs which they are looking to launch going ahead. So I think rural recovery, obviously, they have got the largest market share on the rural side. So I think, yes, Hero is best placed to play the rural recovery game.
Okay, point taken. So that's the view coming in on Hero MotoCorp. But shifting focus to the other stocks which are reacting as well, apart from Bharat Forge, which is up a good 10% now and holding on to those gains, Balaji Mines is another result reaction. Century Textiles is actually holding up quite well. On the losing side, however, it is Sonata Software, which is down and out in the trading session. In terms of the earnings which are expected, Asian Paints is of course one stock which will be in focus tomorrow. We are expecting the volume growth to be 6 to 8%, and the overall product mix is something which is turned negative. There is going to be a bit of a negative operating leverage, and that's why the profitability is only expected to jump up by around 2%. Nishchal, within the paint segment, while the real estate demand has been very strong, it's not percolating to the paint segment on a like-to-like basis given the lag effect. But overall, the commentary continues to be a bit more muted. What's your sense on the paint segment? Is this something that you should stay away from, or is it a good time to invest perhaps?
I think paint segment per se basically underperformed for some time. I think it could be a good time for you to start looking at that. Obviously, the largest player continues to be still a very dominant player. I think the volumes have been pretty good for the Asian. We are slightly more optimistic than 6 to 10%. We believe that volume should be on the higher side, closer to the 10% kind of a number for Asian Paints. So I think overall the paint industry is looking good, except for if you look at from the stock market point of view, I think Grasim's entry has actually created that negative buzz around saying that there is huge competition, and on the ground there is strong competition which Grasim is coming in. There is some discounts which Grasim is forcing to make an entry and get the market share. So I think this could continue to create a problem for a couple of more quarters till we find out what's really happening on the ground. But on the whole, I think the industry is looking good and the stocks have not gone anywhere for some time. So could be a good entry point at these prices.
Okay, Nishchal, stay with us. Lots more to talk about, but we're going to take a very quick break. Look at Bharat Forge. I think that's now frozen in circuit. I'm not quite sure, but yeah, almost a 10% uptick is what that stock has seen. There you go, 1363 on Bharat Forge right now. Hero MotoCorp reacting positively to its numbers so far, holding up almost 2%. We'll take a quick break, be right back. Okay, back with the closing trades right here in ET now. Westlife numbers as well out. Let's see what the same store sales growth is like. The revenues, of course, have seen a very meager uptick of just about 1%. The EBITDA has seen a downtick of about 15%. And you can see that reflect on the stock price as well, just awaiting that SSG number. But in the meantime, a lot of other important numbers as well. And L&T is going to be primary amongst those. So let's take it across to our researcher and... Okay, while I go to Anisha and talk to her about L&T numbers, let's hear it from Gaurav as to what is it that he is anticipating from SBI's numbers tomorrow.
SBI is going to report its 4Q report soon, and if you look at the financials and streets expectation, now they're expecting net interest income to increase almost by 1% on a YY basis. This is actually a minimum increase, and this is because we have already seen a higher base in 4Q FY23. And at the same time, if you talk about PPOP, that may decline almost by 20% on a YY basis. And the reason being that if you look at the provisions, bank had already said that in 4Q they will book another 5,400 crores worth of provision towards wage rate revision, and that is why PPOP is expected to decline almost by 20% on a YY basis. Apart from that, PAT is also likely to follow the same trend. They are expecting PAT to decline almost by 20%. And if you look at net interest margins, because of the higher cost of funds, we may see moderation in net interest margin almost by 5 bips on a quarter-on-quarter basis, and we may see net interest margin settling somewhere near 3.15%. Apart from that, if you look at advances and deposits, the growth in both is expected to remain healthy. So advances are expected to increase almost by 12.3% on a YY basis. We may see this number somewhere near 36.7 lakh crore rupees, while deposits are also expected to increase almost by 11%. But this quarter, commentary will also be important because we have already seen that cost of funds is one of the things that is impacting net interest margins as well as net interest income for the bank. And apart from that, we know that RBI has come up with their draft regulation about the project under implementation, and on back of this, any commentary coming up from this angle is also going to be important, because as we know that SBI is one of the PSUs, and being PSU, it has a corporate book and it might impact its profitability as well as growth from here on. So definitely watching out for commentary, but on the number fronts, we are not expecting any kind of negative surprise, at least from SBI in this quarter.
Okay, so that's the take coming in on SBI, but any moment now we will be getting numbers from L&T as well. So the growth is expected to be mid-teen, somewhere around that 13 to 14% mark, even though the margins might come off a bit, because the margins are expected to dip to around 11% versus 12% that we had seen last year, and the profitability is expected to jump up by 7%. I think most important will be, of course, the management commentary, because order inflow this year has been very strong. Remember, they had upgraded their guidance during the year to 20% plus kind of growth in order inflows. So whether they manage to meet that or not, and going forward, what will be the growth rate? Because on a heavier base, the expectation is now that the company will say that order inflows in FY25 are going to be either flat or a reduction of just 5%, with a margin improvement of anywhere between 50 to 100 basis points and a top line growth of almost 12 to 15%. So whether they live up to that expectation or not is important. What do they have to say with respect to the working capital management and the execution rate in the coming quarters, given the election impact? All of that will be fairly important. But let's also take it across to Rahul Shah, who's joining us on the show to talk to us about what exactly is happening in the market. Rahul, what are you doing in this kind of correction that we have seen over the last 3 to 4 trading sessions? Are you keeping the buying list ready and actually buying those stocks, or do you expect this sideways move to continue in the market and keeping your powder dry?
Hi, good afternoon. I think 2, 3 factors into it. I think the most important factor, I think volatility is in the front seat. I think if we look at it in last 5, 6 sessions, if you've seen that, I think the market's been very volatile. And obviously we saw some correction in last 2, 3 days as well. So I sense that I think a few select pockets we've been seeing selling, and especially from financials, we've seen a lot of them have given up their gains in last 4, 5 sessions. And obviously PSU remains the top, where we've seen a lot of selling happening. So my sense is, I think so far, I think the volatility is the right word which I used it. So I think which has continued, but I would start deploying, or maybe I will stay invested. So I think that so far, I think the result seasons, except for IT, I think the numbers have been so far so good. So I don't think so any regarding any things which what we believe that I think any challenges or maybe anything in terms of the deviation from the numbers what we were expecting. So I think financials which have been in the top notch bets what we've been recommending, PSU and a preferred bet, and followed by private banks. So I think that remains a preferred sector, and I think one should start looking at it. I think there's been a correction 4-5% in a lot of cases. I think one should start building it up, and smaller PSU banks where the correction has been more. So like of a PNB, or maybe like of in terms of J&K Bank. So these are two small banks where we've seen correction. Post today's Canada's numbers also, I think prima facie numbers looks all right, I think, but we have to wait for the call and then go for it. But I think post that also will get more clarity from there. And secondly, SBI's number also, it's there tomorrow, which will give more clarity. So I think in nutshell, I think financials remains the top bets, followed by, I think, real estate sector. I think if we see real estate stocks also have been in a decent correction in last 2-3 days. And I think if we look at last year and a half, quarter-on-quarter performance and the guidance by the management has been fantastic, and we see that numbers continue to deliver. So I think real estate sector also remains a top notch to look at it.
Bharat Forge, by the way, it's climbed up a double digit now, so it's holding up at the highest point of the day. It's a 13% uptick coming in on that stock. 1,400 bucks is where that stock is, and bunch of other buzzers which are actually holding out as well. Look at Hero MotoCorp too. The way it's reacted after its numbers did start off with a fillip, and now it's almost staging a comeback of about almost 4-odd%. And mind you, the better part of today's trading session was not as great for Hero MotoCorp. Now it's climbed up 46.40 on Hero MotoCorp as we speak right now. What is TVS Motors up to? Ahead of its numbers. The last time I checked, the stock was languishing down by about almost 1%. That too has seen a bit of a recovery, come by 0.6% of an uptick. Specifically, Rahul, for two-wheelers after Hero MotoCorp, and especially the commentary from the management, I guess hopes are running high for even TVS Motors, which in any case has been a very performing company and rewarding stock.
Sorry, can you repeat the question?
No, I was just talking about what is the anticipation from the entire two-wheeler pack looking at Hero MotoCorp's numbers. TVS Motors is also supposed to declare its numbers today.
So I think overall two-wheelers, I think if we look at our entire auto pack, I think they've been the best performer in last 6 months to 8 months. And we've seen that two-wheelers obviously leading the pack. So I feel that I think going forward, I think two-wheelers pack will continue to do well. In the same way, TVS also is one of the best performing stock. I think lower cost of raw materials, better product mix, what we've been seeing, and ahead of the launches also, and way we've seen the recovery. So all these factors put together, I think looks like that I think they should continue to do well. So TVS Motors, the numbers should all be also in line with what Street is estimating.
Other factors right now in the market, and a bunch of other stocks also which are in focus, while of course Bharat Forge is reacting to its numbers like we pointed out. Look at Delta Corp also. The numbers of course were bleak, but the stock has been so run down that it started off itself with an uptick, though that also is getting a little bit challenged, and it's now given up its morning gains. Look at Indraprastha Gas. That started off with a very, very big uptick. It surpassed its 50 DMA. That stock, while it's eased off from the highs of the day, but still going good by about almost 3% as we speak right now. But Naresh, what about the entire FMCG pack? And I mean, I'm just looking at Unilever, for instance. That couldn't quite sustain its uptick from yesterday.
So we are yet to get the results from Unilever, I suppose. So once that happens, there could be some more clarity on the stock. But a dip back to 2300 to 2280 would be a buying opportunity. So that looks interesting. In the FMCG pack now, ITC and HUL look the most interesting names because they have not gone up majorly. The other names have already done quite a bit. So you have Marico almost go from 520 to an all-time high in 2 sessions. So out here, I would be looking at ITC as well as HUL on dips.
Okay, but I think the HUL numbers have already been reported, and it was a decent set, and the commentary regarding rural wasn't as strong as the rest of the peers. But yes, it did point out to a bit of a recovery. But let's take the closing trade ideas as well from our chartists. Let's take the BTSC actually. So Naresh, what's your BTSC trade? Buy today, sell tomorrow idea?
So continue to be bullish on Crompton Consumer. It has hit a new 52-week high, crossing the major range breakouts. So stop loss now at 334, target price of 355. Second is a buy on JSW Steel, which has a lot of support around 850, 860 levels, has been recovering from here. Stop loss at 858, target price of 875.
About your BTSC trades?
So first one is about Biocon. That's a chart which is looking attractive. We flagged off a target of 314 plus. So revise the targets higher to 318 and stop loss to be kept at 288. Ashok Leyland is something which is also looking attractive after 3 days of correction from 202 to 190, 195 odd zone. I think it could be a good buy territory for the stock at current levels. So buy with a target of 205, stop loss at 193.
Okay, bunch of interesting stocks out there. Can't take your eyes off from Bharat Forge or for that matter, the way Hero MotoCorp is climbing up after its numbers. We'll take a very quick break on that note. Be right back. Track the last lap of today's trade.
Welcome back. Well, the market mood continues to be fairly volatile. So we are again at 22,300. So after that recovery that we were seeing, we are completely sold into that. Pretty much flat as of now, 0.00% on the index in terms of the net move right now. In terms of the gainers, Bharat Forge has actually piled on more gains. It's a 15% gain coming in on that company. In a rub-off impact to Balaji Amines, there's also a move on Alkyl Amines, so that stock is in focus as well. And of course, you also have Tube Investments, Inox Wind, some of the other buzzers in the trading session. Let me take it across to Ansh to get more sense on it. Ansh, big buzzers in the trading session, the likes of Bharat Forge, etc. Tell us, what else are you spotting?
That's right. So Capri Global will be the first stock in focus, as the stock has given a good breakout from its downward sloping channel with volume of over 20 times its average trading volume of last 10 session, indicating very strong participation in today's breakout. And this shows the investors' participation and their interest and trust in the stock. Here we are seeing the stock has also surpassed above its 20, 50 and 100 DMA, which adds to the positivity of the stock. Apart from this, IGL will also be in focus, as the stock has actually formed a bullish engulfing candlestick pattern after 4 days of decline. This usually indicates a potential reversal in trend on upside. Also, the stock is taking good support at that 100 DMA level. Lastly, Bharat Forge will be in focus, as the stock has given a breakout from its downward sloping channel with volume of over 5 times its average trading volume of last 10 sessions, and it has bounced from that 20 DMA level. So keep an eye on the stocks.
So those are the big buzzers in the trading session right now. But Rahul, within the earnings season so far, what have been the big outliers for you in terms of something which is, let's say, beaten expectations by a whole margin or completely disappointed? And we can include the likes of Voltas, etc., because while the initial update was very strong on the volume growth, it clearly disappointed on the margins.
Yeah, so there have been a few here, there and there's, but so as I said that I think tech was completely a disappointment. I think worries over the growth. I think technology stocks, we saw most of them reported a lower growth. Guidance were poor, margins were shrinked in a lot of cases. So I think, and the outlook still remains bleak in terms of the lower demands and the overall. So I feel that technology space, I think the entire space, I think we've seen that, I think, and we've seen a lot of sell-off in big names as well in that particular sector. So I think technology has been completely washed out, which I feel. Second, obviously, as you may mention, Voltas, I think what initially the thoughts were, I think the numbers could have been better than what the street was estimating, but I think nothing great. The numbers were not so great what we feel. So I think this sector remained, muted or a negative in terms of IT and in cap. So now the focus again, if we talk about, I think the results so far, I think the banks have been, fairly large in terms of private numbers, whatever has been reported. I think Axis, the numbers were better than what street was estimating. ICICI, the numbers were better. So I think this two and HDFC in line with what street was estimating. So I think in all, I think banks, the numbers were okay. So I don't think so any great outlier in terms of this, but I think the numbers were fairly in terms what the street was estimating. So I think this is what the earnings season has been.
Okay, that's a synopsis of what the earnings season has been so far. But let's take it across to Sharad and find out what the dealing room chatter is currently and what are the stocks which are being talked about. Sharad?
Well, yes, what we are hearing from the dealers is that a large mutual fund house has been acquiring stake in the company, and car trade is in focus, and basket buying coming in from domestic institutions over the last 2 trading sessions. Now, the stock itself is up more than 30% in the last 5 trading sessions, and importantly, the key DIs invested in the company already are the name of ICICI Pru Mutual Fund, and also importantly, the overall the mutual fund stake holding in the company is almost 4.21% stake. Now the company did come out recently with its results, and the results are very strong, especially EBITDA beat coming in, and also strong free cash flow generation was there, which is a must for a startup related company which recently had come to the bourses as well. Now the company is focusing on capitalizing on the strong potential in OLX, and the street feels that the margin improvement might be on track for car trade going ahead. So importantly, DI interest is back, especially when it comes to car trade tech.
Car trade clearly buzzing in the trading session. That stock up around 10%. Thanks so much, Sharat, for joining us today. But it seems like pharma sector is going to be in focus, and some sort of support might come their way with a bit of the GST inversion actually going away and some revamp in the overall taxes there. Let me take it across to Prakash to get better understanding on this one. Prakash, help us understand what exactly is the government mulling and what could be the implications?
The pharma sector is likely to get relief under GST, as we are learning from our sources. The GST Council is likely to correct inverted duty structure issue being faced by pharma industry right after the election. Sources are informing that the Ministry of Chemicals and Fertilizer will approach Ministry of Finance on inverted duty structure issue. In fact, Department of Pharmaceuticals have held consultation with the industry over this issue, and industry has made their point by saying they are facing anomalies under GST on input and output products. In some cases, 18% GST is being levied on input products. However, 5% GST being charged on final products. And therefore, a department is likely to make recommendation to have 12% GST on final products and 5% GST on raw material. Lower GST on raw material will help domestic industry to keep down their overall input cost, and it will also help industry to make their products competitive in a global market. Therefore, the final recommendations are likely to be submitted to the Finance Ministry once the new government sworn in.
Okay, that's an important exclusive coming in there. That the pharma sector is likely to get relief under the GST ambit, perhaps. But that said, let's just continue to track what the markets have been up to. While the index is really not doing a whole lot, Bharat Forge continues to scale up. Crompton is making some decent moves, a 6% move coming in there. ABB has sprung up almost about 4.5% as we speak right now. And I think most of the cap goods majors are looking quite okay. L&T is now at the day's peak, about a 2% uptick ahead of its numbers. That's looking strong. Reliance is powering up today. There's SBI, which ahead of its numbers tomorrow is not looking bad at all. And the Adani group of names as well, about a 0.5% uptick on Adani Enterprises, not looking all that bad in this kind of a volatile market. But directionally, Kunal, where is it that you see weakness and strength in the index? Because it's almost changing on a daily basis now.
Yeah, very difficult to decipher the exact trends for the large cap names because, for example, Reliance was one of the weaker names over the last 3-4 days. The stock had corrected more than 150, 170 plus points in just the last 2 or 3 days. And today the stock has recovered more than 70, 75 points from its intraday lows. So compared to that, HDFC Bank, ICICI Bank and Axis Bank to a larger extent, these stocks had done quite okay for themselves. They are the ones which are going through a correction today. So I think it's very difficult to decipher the exact nature of the trend, and that's why we look at the broader patterns for in terms of sector trends. For example, the auto index, that's something which is looking attractive. The sector had continued to outperform in the month of April, and so far we are seeing many of the auto stocks seeing a bounce back. Today, for example, Hero MotoCorp has given a breakout for itself. Ashok Leyland is also looking attractive. So very few scattered names across individual sectors. I think that's why I would probably want to concentrate on just few of them. Auto could be one of them.
Okay, autos could be one of them, but let's take a bit of a breather and also listen into the commentary coming in from Hiren Ved, because we did speak with him about markets and mandate and what markets should really watch out for. Listen into a slice of that conversation because it was very interesting to kind of get his views, how the consumption story is actually moving and what really is going to be next for India Inc.
Today, it is fair to say that the market believes that there will be continuity. So, if something goes wrong with that hypothesis, will you get a deep correction? I think you will, right? But we've seen historically that if the underlying stocks that you own have fundamentals, they have earnings behind it, they have cash flows behind it, value will come back. Same thing happened in COVID, right? I mean, nobody knew what COVID was. Nobody expected something like a lockdown could happen where everything would be shut down. And markets fell aggressively, but they came back. So I think, after an initial jerky period, rationality will prevail. I do believe that sector leadership has changed post-COVID. And there is always a recency bias that we have. We tend to stick to companies and sectors which have done well in the previous cycle. And the so-called previous cycle belonged to everything which was B2C, consumers, B2C lenders, right? I think there is a regime change. And whether you like it or not, the market's telling you very clearly, because where the outperformance is, and it's not a one-year outperformance. If you take the last 3-4 years, the best performing indexes have been real estate, the PSU banks, the defense stocks, capital goods, infrastructure, all of the so-called cyclicals, right? I think very clearly there is a leadership change. And I don't see that leadership changing so quickly, because these cycles typically tend to last 6, 8, 10 years. You never know how long this cycle will start. But I'm very clear that we are at the early stages of this cycle.
Okay, in fact, we've had many earnings and many management reactions as well. Just quickly get you a slice of what the management takeaways so far have been.
More tractions of deals. We are engaging many companies with our attempt to bring products that are better than the standard of care and to improve the standard of care in India. This is very important to us. As one, we are adding value to the healthcare system. At the same time, it is a growth engine for our company. We always stated that we want to be top 5 in India, and this is our way to do that.
EBITDA, we are targeting 7.5 to 8.5. Entire year, that would be a 4. Few areas that we have identified where we can do the operational expenses, efficiencies, and some initiatives in that direction. That should help us maintain those numbers.
We've got a major amount of focus and initiative because we believe there is still a degree of under-penetration of our full product range in rural markets. So for us, we have consistently guided that for us, rural markets are growing at 1.5 times urban, and that continues to be so. We believe at now the current raw material environment, we don't need any more price cuts. We don't also see raw material prices falling further in any significant fashion. So to my mind, over the next 6 months, you may not see any significant price cuts or price increases for that matter.
Right. So we expect, I think, with respect to the construction, around 10 to 15% growth, and toll business should grow in range of 15 to 20%. So almost there is 2 trillion worth of opportunity which is going to unfold in near future on a BOT basis. And in past, we had almost 30+% kind of market share in the BOT and TOT space. Even if you consider conservative 15-20%, so that translates almost 20 to 30,000 crores kind of opportunity going to unfold over the period of 1 year in next 1 year.
Okay, those were some of the top voices and managements we spoke to through the day for their earnings. But Nifty managing to hold on to that slight bit of a green today, recovered from the day's lowest point, 22,300 levels is what the Nifty is managing to hold on to. Sensex, slight bit of the negativeness and negative bias still continues for the Sensex, closing at around 73,500. Nifty Bank clearly not supporting in terms of the performance today. Among the top sectoral loser is the Nifty Bank, down almost 0.4%. HDFC Bank, ICICI Bank among the top losers. While in terms of the gainers for the Nifty 50 today, we did have Reliance Industries, which is supporting the gains. We did have SBI, which managed to hold on to gains, as well as L&T managing to hold on to gains ahead of its earnings. And among the top pullers for the Nifty 50 today were these stocks in trading. Other than that, let's talk about Nifty Auto. We did have Hero Motor, which is in focus, TVS Motors, which will be reporting its numbers. That's also managing to hold on to some bit of a gain. And Nifty Auto today among the top sectoral gainers. Nifty Energy, Nifty Metals among among the other names that have been managing to hold on to good gains today. Other than that, let's talk about some of the earnings movers today. We did have Bharat Forge that managed to hold on to a very good gain, saw a very sharp up move in trade today after its numbers, as well, especially the commentary that came in for FY25 from Bharat Forge, managing to close on with gains of more than 15% for Bharat Forge. Let's also pull up the charts of Godrej Consumers. We did have con call highlights that came in from Godrej Consumers in line set of numbers. Street was surely positive for Godrej Consumers, holding on to gains of almost 2% today. REC also in focus after its con call highlights in terms of the growth and outlook in terms of AUM. Strong outlook there, so REC in focus. While on the negative side, we did have Sonata Software, which saw a fall coming in after its numbers. Voltas as well as Pidilite not managing to hold on to gains after their numbers. That's how the market is looking like. Broader market surely seeing a bit more of an outperformance today versus the benchmark indices. Nifty closing at 22,300 levels.